Hey, good morning, everyone. We're going to take a look at the market activity for Friday. First, I've got this tweet up. Someone posted their order flow ladder, and this market activity is right here at this turnaround. And they're showing, you probably can't see this, but there's 210 orders on the bid and 1,778 on the offer at 51.18. So that is a huge discrepancy, the ratio between the 210 bid versus 1778 offer. So they're lifting the offer at 51.18 right here, where you can see this huge wick where they came in on this second wick, not the first wick, but the second wick. And that was a retest of the daily one. The first time we broke out of the daily one, we got up to 51.30 and it was slammed back down right into the daily one. And I think the dealer was selling at 51.30. And this is what confused me. And so you can see the red coming in here, and you can see the opposite. You can see the dealer came in 1193 bid to 800 offer. Uh, that is 1,099 bid to 785 offer. 655 to 364, 1150 to 831, 1058 to 924. And I was seeing the strength of this push down, and this was the quarterly three sitting here at 5127. So the dealer was shoving it down, 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 down. And then you see here 1425 to 1037. You could see they were trying to lift it at 5122 and 1158. And the dealer kept shoving it down. And when it got to 5118, the dealer let go. For whatever reason, either they let go or they were just saying, we're not going to sit here and rake ourselves up and down in a zipper between the quarterly three and, we're just going to participate. Whatever the algo did or the decision, somebody flicked the switch and they said, fuck it, let's just go. This is where the go line was, 5118, right here at the daily one. And they shot it up like a rocket. So that's what happened. There was a bull bear fight here. I have to tell you, I was short. I got my little face ripped off a little bit in here, but not too bad because I had my stops in place. I trade with an algo, and my algo stopped out. I got to stop out. So, I mean, yeah, so what? Get my big girl pants on. I would have rather have made a shit ton of money selling it off. I was actually looking forward to it, but that did not happen. So I did not participate in this upside because I wasn't sure what was going on. There were so many different huge bids and offers. I didn't see the order flow ladder. I could just see the order flow in the price action. I knew that there was a bull bear fight going on, and I just stayed out of it because we have more than just the dealer trading. I think we have the plunge protection team also. So we've got the central banks and the White House. The plunge protection team is the presidential commission. So somebody from the White House is also trading. So I don't know what's going on, but I just said, it's over my pay grade, it's over my budget. One stop out's enough for me. So I just sat on my hands waiting for all this to resolve and to go into next week. And I was studying the market at that point. I wanted to see where this resolved. And it went up to the daily three, as we can see. And the weekly, you can see here, there's two lines. This is where I got confused last night. I thought this orange line was the 7-day one, but it's the 8-day three excuse me, I mean the 7-day 3. It was the 7-day one confluenced with the 8-day 3. So they took it up to their weekly spreads. They did not allow price to touch the 7-day 3. So the dealer came in very strong here to prevent 5150 from even getting touched because that's where the 8-day 3 was. And they protected because that's where they're hedged. They hedged from the 5118 to 5150. So what does that mean going forward? Many people will tell you that they believe that we're long, in March, which is a good, assumption considering how strong the other market players are. So either the central bank or the plunge protection team. And then what I'm trying to let you know is the dealer is hedged its hedge. So they were 50-15 on the SPX. We'll look at the SPX in just a minute. And so they're having to raise their hedge each time that line breaks, right? So they were hedged to 5150 ES. And where will that hedge come off next? Right? So if 5150 breaks to the upside, I mean there's so many levels. We've got quarterly twos, 5172, 5183, where it could come right back down if, the other side lays down, which who knows what's going to happen. 5127 through 5139 or the um, additional quarterly three. So let me just explain this to you. Here was the quarterly three that I knew that it was um, resistance, and clearly it was. And we came back to test it, and that's where I thought the test would work and we would come back down, but they blew through it. Um, you have time periods, you have trade days and calendar days. I've gone over this in Twitter a lot. So you've got 3 months, you've got 90 days, and you've got 12 weeks. So that's what these lines are. I can, divide the time up into different buckets. And so now we can see that we're leading up to 5280, 5327, and 5339 on the quarterly if it gets that high. On the monthly, 5194, 5200 is your first stop, and then 5232. And on the weeklies, 5166, 5194, 5200, 5232. That almost looks the same as the monthly. Let me see if I didn't change something here. 1 second. Yeah, sorry. I need to change this to a month. Those were weekly levels. Apologies. Fix this real quick. So I need to put 30 days and 4 weeks. Let's take a new look at this real quick. Okay, so 5178 to 5191, and then all the threes are up here at 5300, 5303, 5328, 5350. So if we break these ones, we've got twos right away, 5210, 5262, 5282, but the 5300s are up there. So we'll see how much the dealer has to rehedge each time. And I know that they lose a little bit of money doing that, but they'll participate like we saw them do Friday. They'll start trading with it to make up their loss. And that's why it went directional really from 51.27 to 51.50 so fast. I mean, it just went straight up. And that was the reason for that. And I know this video is a little bit confusing to you if you haven't followed me before, but the VIX is what also got me yesterday. Most of the morning we were inside the ones, the 1, 2, 3, 34, 68, 95, which means low volatility. And granted, the first part of the trade session in the morning was just non-directional drift, right? Just like the VIX showed. And we never got past the 68% of the daily range. Um, and it's emblematic. You can see we stayed inside the 34. So you have the mean, and from the mean out is 34, and the mean down is 34, and 34 and 34 is 68. So that's one standard deviation. So you can see that the daily 1 day range stayed inside the 14 period range, which normally would have translated to the price action staying inside of its daily range. You know what I'm saying? The ones. But it didn't. It broke out and went to the threes. So we saw price action going opposite of what the VIX was telling us it was going to do. And even Carly Trading, she even sent out a tweet saying, "Did y'all just see this price action?" Nobody could believe what they were seeing yesterday. I mean, it was totally divorced from reality. And that is because we had higher powers than the dealer running the market. So that's either a central bank was trading it going long or the plunge protection team. So there's just none of us were doing that. None of the funds, none of the retail traders could have done that. So where did the the SPX go? Here's the SPX. It traded up to the 8 day one. So there were some hedge levels on the SPX also that we ran into that coincided with that 7 day one, 8 day three on the ES at the daily three. So there were definite markers of where the dealer used our historical volatility levels to park their hedges. And that's why I think JATS indicators can help you so much. Just, having these levels in your pocket um, will provide some solutions. So we'll see about posting those more frequently on Twitter going forward in the private Twitter so I can have levels for you and help you make some sense out of this. We'll also go through our interpolated and extrapolated SPX levels and see if we can come up with a daily trade plan each morning going forward. So I'll look forward to doing that. We'll be talking about this on Tuesday with Tom Schneider and how we can use these historical volatility levels not only with your futures levels but also with option contracts because the options, have daily, weekly, monthly, quarterly levels. And nobody can divide the time up like we can with the trade days and the calendar days and then the 30 days versus 4 weeks versus the number of days in the trade session. So our 1 month levels will give you the actual trade days, and the 30 days are just straight out calendar days, and the 4 weeks are just 1, 2, 3, 4. So all right, so we'll get started on that going forward soon next week, and y'all have a great weekend. Just be aware that we're in new territory, all right? And we'll try to get through it together. Talk to you later.